Welcome to our Customer Value Management CVM graphical tour. We hope this video helps you introduce more CV elements into your marketing projects. Regarding the watering metaphor, we imply growing, cultivating, nurturing, managing customer value. Table of Contents. 1. Introduction to CVM, Customer Value Management, a graphical tour. Let's start with the definition of Customer Value Management. CVM aims at optimizing the value of the firm's customer base. But what is an optimal treatment may vary from customer to customer. This leads us to segments of size 1, decisioning, targeting, customer insights, next best action, personalization, etc. See our other posts for these. If we're optimizing the whole customer base value, then we should know how much an individual customer is worth. Definition. Customer lifetime value is the total value of all contributions to profit and overheads you generate from that customer during their lifetime, i.e. the period they remain a customer. But how do we know a customer will last 3 years or more? We don't know for sure. It's a probability. But can we put all our trust in statistics? Well, there is truth in lies, and there are lies in truth. Statistics. Lies or truth? The average American has half a dog. True? Question. With customer retention rates of 50%, how much of a customer's margin contribution can we expect to have in year 2? Answer. 50% of years 1. Another question for you. What is the total customer lifetime value expected in 5 years for customer margin contribution equals 1 and retention rate equals 50%? Answer. It approximates 2, but with discounted cash flow, it would be a little less. For CVM, it becomes key to predict an individual customer retention rate. Normally, retention rate is calculated using a predictive model, a function of many predictors, such as number of policies held, HTTP referrer used to land at our site the first time, etc. Here's a chart of customer retention rate by number of insurance policies held. Notice how the retention rate increases with more policies held. In non-insurance companies, number of policies could become number of products, contracts held. Again, what is modeled is not retention rate for all customers as a function of number of policies, but instead retention rate for each individual customer as function of many predictors. So let's run a hypothetical scenario for customer value management. Suppose we're looking at how much we can discount the sale of a second insurance policy for a valuable customer. What happens with his retention rate if we sell a second policy? This is the whole analysis of what happens with customers' lifetime value after the second policy. Notice how, from the second year onwards, the new green bars are taller than the previous ones due to the increased retention rate. So, where the previous customer lifetime value projection reached total height of approximately 2, our new projection skyrockets with much taller green segments and blue segments, representing the new policy contribution to pair them. It goes through the roof indeed. We have to open the slide to show how many times more value is provided by this simple sale. It's much more than 3 times the previous customer value, and at the 5th year, the segment or bars are still not close to 0. Now that we know our customers, we need to find out where to invest our CRM resources, which customer interactions cost more or less, and what is their ROI for each customer. How much should we invest in retention, and how much in acquisition? What is the quality or value of the customers that can be acquired? These questions are strategic marketing, optimization, and decisioning questions. The problem behind these questions is the main strategic marketing concern. According to the IDM, this concern is establishing the optimal relationship of dynamics between retention, acquisition, penetration, and cost to serve by customer value group. This flow of investments and their returns can be modeled as a network flow optimization problem Think of it as simplex on steroids. Like Heraclitus, the Greek philosopher, once said, everything flows. Money flows, customers flow in and out of the company, customers' transactions flow, marketing actions reach some customers at a cost and cause other flows to happen. If we can attribute a value to each of these, we can model them in a graph or network flow. Here are some next steps for interesting conversations in this topic. 1. The formulas for CLTV/NPV. 2. Strategic marketing investment modeled as a network flow optimization problem. 3. Retention or churn propensity models. 4. Decisioning calculators, mini business cases, what-if scenarios for each customer interaction. 2. Motivation for customer value management. In competitive markets, companies ought to go for customer quality and not quantity. Customer value management is instrumental in acquiring and retaining high-quality customers. See why below. 1. It costs 5 times as much to acquire new customers as it does to keep those you already have, regardless of CVM. Source Forbes.com. 2. If online retailers could retain 10% extra customers, they could double their future profits. Source, again Forbes. 3. The Pareto rule. Typically 20% of a company customer base represents 80% of their revenue. Are you differentiating your marketing by customer value group? Let's make a critique to the motivation for CVM. Are high-value customers all a company needs? How about customers who can open doors for an organization? Customers who are perhaps not good quantitatively, high-value customers, but excellent qualitatively. Qualitatively good customers can open new markets, provide good references, become partners, help in R&D, etc. CVM, together with our solutions on Pega marketing and next best action, are key to obtaining more results for your marketing budget and outsmarting the competition. The SmartRules approach to decisioning and marketing and to CVM. The SmartRules approach for decisioning and marketing is executed by high-quality teams in partnering model. This will deliver better, long-lasting results. Notice the progression of value added from commodities to goods, to services, to experiences, and finally to transformations. SmartRules goes beyond the level of supplying certified commodity resources. We go beyond this level towards the higher customization, higher value added, and higher quality levels below. Quality is the measure by which one meets customer expectations. Our customers expect better, long-lasting results. We're more than a supplier. We are a partner in an experience of transformation from start to end of a Pega marketing project. See the next slides on qualifications for details. We have a view of being smart in working with our people and our customers, and therefore we like to see numbers, graphs, results. Our greatest pleasure is to see our customers changing to use and speak CVM on a daily basis. We like to build the best Pega marketing implementations that fully exploit CVM and other modern marketing management techniques, which will bring competitive advantage. 4. SmartRules qualifications. Our assets are our people. Right on its starting years of 2016 and 2017, our D&M unit was already hired by Pega Systems themselves, besides other highly satisfied customers in the Netherlands and Germany. Our experienced staff had done some CVM back in 2005 and in 2014-2015 for telcos and insurances around the world. They have many times worked under Pega Systems while enabling and partnering large SLS implementations of Pega marketing. Some of our people have PhD-level training in optimization and predictive analytics AI. This is what CVM is about at the core. We also have staff with broad experience in BI marketing, including digital, web, and projects in large organizations. The bottom line, SmartRules will enable your change. 5. Our offer. 5. What is our offer or solution? We can start with an initial free assessment on data maturity and readiness for an organization thinking about engaging on a Pega marketing project. Next steps. 1. more assessment and situational analysis. 2. Working on translating marketing strategy to tactical and operational plans for IT processes and projects. 3. Project scoping and requirements. 4. Project design and implementation with our accelerator templates. Thank you.